Welcome, everyone. My name is Will Chang. I'm the investment specialist for Geneva Benefits Group, where we strive to be able to serve those who serve our churches in the PCA so the gospel can go forth. And I'm glad to have you here as we interview one of our portfolio managers who leads our EM, emerging markets exposure, Maria Negrete-Gruson. Thank you so much for joining us. Glad that you're here, Maria. And maybe we could start off by just introducing yourself, maybe a little bit about your background or career. Did you always start off in emerging markets, or was it some other asset class? And we could start and go from there.
Well, thank you for the introduction. It's really a pleasure to be here. About my background, I can tell you I am from Colombia, the country where I was born, raised, and went to college too. And then I came to Columbia, the university in New York City. So it was sort of a very different type of environment. I was born in a very small village in Colombia. That's where I grew up. That's where my family is from. My father was a rancher. So it's a very long journey to New York. But at Columbia, I really learned a bit about this business, the business of investment in emerging markets. And I have been doing it since the beginning of my post-MBA career. I started, my first job at the business was doing emerging markets at DuPont Capital Management, which is the pension arm of the DuPont Corporation. I was there for a decade, and then I came to Artisan, and it has been decades-long experience with the asset class.
Oh, great. Thanks for sharing that. Would you be able to define or explain for our listeners, how do you think or define what an emerging market is? Or are there maybe 2 or 3 characteristics that help someone to understand this is an emerging market?
I think it's not as easy cut as it might be, because a lot of these emerging markets are very different from one another. It's not a simple answer of how there are these 3 or 2 characteristics. Some of these markets have in common that they are in early stages of development, right? So they're going from a very basic economy to a more developed economy, and that usually comes associated with higher growth. That's a group of emerging markets. Other emerging markets are characterized by being more like stable economies at this point, but they are expanding the middle class. So that is where the opportunity comes from. Others could be even more developed in their economic development, but still require capital from us. I think that's perhaps what they have in common. The requirement for capital, the need to having us as sort of investors globally deploying capital to these businesses that that are in these early stages of growth or low penetration or accelerated transformation.
And so it sounds like then primarily it's more of a top-down macroeconomic perspective to begin to identify what an emerging market is?
Yeah, but even within that top-down macroeconomic, there are the bottom-up opportunities, right? It's the stock opportunities. Even in a more developed environment, there can be some emerging market type of company opportunities. At the same time, even in a more basic EM, there might be some stories that are already past that stage of emergence.
Makes sense. Thank you for sharing that. And would you explain for our listeners as well, how do you see the value add or the unique contribution of an EM exposure within an overall portfolio?
I think what EM provides and has kind of proven over the many economic cycles is that we are a very big diversifier, right? The opportunities in EM are quite different than what's happening in developed markets. So that diversification capacity is very important. At the same time, there is the growth opportunity, right? Even if emerging markets might be fragile and might be volatile, which is another characteristic of these markets, the boom bust, this economic crisis that can happen in emerging markets, from that comes this opportunities or rebuild, these opportunities of early growth. And that is one of the great offers that emerging markets has.
And you mentioned there that EM may actually go through cycles of boom bust in their economic cycle. And another way to think about that is there's a lot of volatility. It could be riskier than other asset class or exposures. What would you say to our participants that are concerned about that risk? Why would we take that risk when it comes with that much volatility and uncertainty?
I think acknowledging that reality is very important to be an EM investor, right? We cannot fall in love with the idea that these are people around the world that have never had access to this and we're going to sell it to that and that's going to be growth. No, the reality of EM is one that yes, there is growth, but also there is going to be a very bumpy ride that the boom bust exists. So going eyes wide open into these opportunities is very important. So knowing this reality, we need to, that's where the value of a process or what we do is identify which companies are going to be able to withstand that volatility and be kind of survivors at the end of the day, that endurance, that capacity to kind of not only thrive in these emerging markets, but survive when the times are low. Also, that's where our emphasis is on sustainability as well. Sustainability to us has that characteristic, that capacity to endure, that capacity that this management of this company has created, that is going to allow them to translate that growth opportunity that is abundant in emerging markets into a sustainable opportunity. And that not only has to do with earnings, but how do they treat the environment? How do they relate to the community where they serve? Those are all elements that allow these companies to be a long-term going concern. So that is what we're looking for.
And for our listeners, that the way that Maria described this is why their strategy is called the sustainable emerging markets, to be able to identify those companies that could have sustainable growth and earnings through the turmoil of different economic cycles. And you also mentioned that you have a very distinct approach to identifying those companies. I've had the privilege of meeting you and your team as we met up in New York, but if you could share with our listeners, maybe describe your team. What is the unique approach that your team applies in order to identify these companies that could sustain through the long term in an EM environment?
Yes, and I always like to start here, which is describing the team. I think one of the three elements that I always highlight about our team are, first of all, experience. We have been doing this for a long time. We have had the privilege or the stress of having gone through many of these boom busts, and that is very important. We bring that to the table. That experience, though, comes from many of us, with the exception of Megan. We're born and raised in an emerging market. So EM is not something over there to us that we get in and out, that is tactical. EM is who we are, and we are committed to the people of EM. And that drives us. That is what drives our process. That is what drives our passion for emerging markets. So the second aspect to highlight about our team and our process is continuity. The fact that we have been operated continuously over these different market environments has taught us many lessons. And these are lessons that we incorporate to our tools today, to the process today. All these painful periods of that crisis that hurt us, all that is incorporated into our risk controls, into our bottom-up fundamental analysis. That is very important. The final point is communication. We are a team that is very nimble. We are communicating effectively. We travel extensively. That is a big part of our job, engaging with our companies. So after I do this visit, I'm going to go to Asia for a month. And I'm going to spend 2 weeks in India. I'm going to go to Thailand. I'm going to go to Indonesia, and on the way back in Singapore. This is a typical, and while I'm there, I'm going to meet with our analysts that are also traveling in these regions at the same time. So spending a lot of time with the management, understanding what they're doing and explaining how we are assessing them, that is a big part.
And as a plan sponsor and client of yours, it's certainly one of the value add that we saw, where your team and yourself are not only on the ground floor in the countries meeting with these companies and management, but there was a diverse background and cultural diversity within your team that understands the individual parts and cultures of the globe, which I think is very important to be able to evaluate a business for sustainability in a market that's an EM. Maybe we could end on this and share, which I think could be challenging, but probably had this question 1,000 times. What is your sort of go forward basis or outlook on emerging markets, given some of the geopolitical tensions, but also tariffs that the U.S. have been implementing and negotiating across the globe? Maybe it's uncertain. How do you think about managing that on a go forward basis?
Yeah, it's for sure a reality, and the reality we're living today is towards a regime which is, for humanity's sake, is a terrible thing, and these are wars that touch the people of EM very directly. So I think that is a terrible sort of backdrop of what is happening. At the same time, the geopolitics and the rupture, let's say, between the US and China and all that signifies, all things that in our mind are very difficult environments. At the same time, we have found that these environments has brought up in emerging markets the necessity really to find alternative ways and alternative ways for people to make their living, for these companies to thrive and survive. And there are winners and there are losers. In the issue of the rupture between the East and West, well, there are new routes of commerce being developed. And within that, there are winners. And that is sort of our job, to identify these opportunities. I guess as humans, we want these conflicts to end. We want the world to be increasingly connected, because I think that helps us all. At the same time, in this reality that we live, that's how we have to invest. And we invest in companies that are trying to find the alternative way to kind of face this reality and find opportunity. And as I said earlier, this engagement that we have with the companies is about that, to try to find the company that is acknowledging this reality, not hoping that tomorrow it changes. No, this is what it is, and this is how we're going to kind of create an opportunity for us, for our employees, for our companies.
Thank you for sharing that. And if I could just even also say that what you shared on your outlook, but also in your past history, is just a very versed, but also very experienced with very acute acumen with yourself and your team identifying these companies that has helped actually our portfolio and our participants in our retirement plan. And so we're excited for this partnership, and we're excited to see how we can move forward together. Thank you for your time. And for our listeners here, if there are any further questions that you have about our services or financial plans, please reach out to us. You can start at genevabenefits.org, and we are here to serve you and more than happy to have a conversation and engage. So thank you for your time, and thanks for listening.
Thank you for the opportunity, and it's a privilege, and we feel very honored to have the opportunity to manage
Thanks, Maria.
this partnership.
Thank you so much.